Let's talk to Ronnie Chopra. He is the Chief Market Strategist for FIXI Markets. Very good morning to you, Ronnie. Right, FTSE 100. What are your thoughts?
Well, we've had a really good run in the last, like with all the major indices, but we've lagged behind the Dow, the DAX, the CAC, all the major European indices, and one of my favorites, the Nikkei.
Yep.
And with the FTSE currently just around the 7,700 level, I see a lot of value in the FTSE 100 compared to its international peers. Firstly, the FTSE 100 is a global index where 60 to 65% of earnings are in US dollars. So there's no real reason why we should be 25 to 30% cheaper than the Dow, for example, because the Dow obviously has multinational companies and we have multinational companies, the likes of BP, Shell, the large pharmaceutical companies, Glaxo, AstraZeneca, whatever. There's so many. And to me, there's a lot of value in the FTSE 100 at the current level. We've lagged behind, and fine, we have a little bit of political uncertainty here, but likewise in Europe, there's so much instability. In the US, we don't know whether Trump will get impeached or not. So, fine, all the Brexit talk obviously tarnishes the FTSE 100.
Yep.
Also, we've had strength in the pound against the US dollar, where we're approaching the 140 level, 139.30 the last time I looked. So that obviously puts a dampener on a number of UK companies because they earn their money in US dollars. But still, on price earnings ratios, on fundamentals, you have at least a dozen companies yielding in excess of 5% in the UK. You have companies on price earnings ratios of between 9, 10 and above in the FTSE 100. I don't think there are any in the Dow 30 at that level. And I just see a lot of value in the FTSE 100. And I also kind of see that the pound is probably going to, it's not going to be it's not going to be easy now for the pound to extend above 140, I don't think. Especially as we're in these Brexit negotiations and, it's going to be difficult. So that, if the pound doesn't go much above 140, we are like a currency player. There's that inverse correlation with the FTSE 100 and the strength in the pound. So if the pound weakens, and this should be given that extra boost, so that's a massive catalyst. And if not, money is still cheap. Foreign companies should be buying British companies. Whether the UK government allows that, I mean, recently you had that bid for GKN last week, which for a number of years was a
potential target.
A potential target, but even a dog of a company. It's like, it's like buses. Now there's talk of other bids coming into play. And I can see something similar with a lot of other companies in the UK that are potential bid targets. I mean, the likes of Aviva, which was in discussions with Prudential like about 10, 11 years ago. That's one. I can see the likes of, I've mentioned it before, Marks and Spencers and Sainsbury's, still making huge profits, yet on very, very low valuations. Other companies, possibly British Telecom, another sitting duck, languishing around the £2.70 mark. They've had their problems in Italy, etc. But the sum of parts for something like British Telecom far exceeds the current market price of 260 pence. And then take in some of the utilities, the likes of Centrica, SSE, National Grid, all these companies yielding 6-7% plus. They're all potential targets. Obviously, with the utilities, we have the Labour government casting a cloud over those utilities in case of possible nationalisation. But there'll be a lot worse things if they do come into power, unfortunately. But yes, with the FTSE around 7,700 and the Dow around 26,000, which in 1987, when the major crash occurred, the Dow Jones was actually higher than the FTSE 100. Today, the Dow Jones is over 3 times the level of the FTSE 100. Where's it gone all wrong?
On that note, Ronnie, that was a soapbox special from you today. Fascinating stuff. That's Ronnie Chopra. Thank you.
Thank you.